All right, so we're gonna go over kind of the high level 30,000 foot view of Profit First, and we're gonna get a little bit into the trenches because when I was talking to Eric about this presentation, I'm like, it's a workshop. I want people to walk away with either one or two things they can go do, or at least just be able to wrap your arms around this thing and be like, okay, now I get what the heck she's talking about. Whether you've read the book or not, it won't matter. You are going to understand what Profit First Restaurants is and why it is extremely powerful.
This episode made possible by Restaurant Systems Pro. With excitement, allow me to introduce to you today's guest, founder of Spark Business Consulting and the author of Profit First for Restaurants, Kasey Anton. Kasey, my lady, are you feeling unstoppable today?
I'm definitely feeling unstoppable today.
Yes, and I'm stoked. I was just sharing with the people that joined us today. I am a user of Profit First. I'm a user of your services with Spark Business Consulting. I'm not just a promoter of the work you're doing. I'm the beneficiary of the work that you do. And I do believe that Profit First is a life changer. This isn't the first time you've been on the show. We had you on the show way back. I think it was like 2019. Episode 637. Mike McAllowitz joined us. We went deep into Profit First. Today we're gonna recap the highlights of Profit First. We're gonna talk about your book, which is launched 2 years ago. We're really gonna dive into the case studies and the success stories, and hopefully we'll be around for a Q&A at the very end. But before we officially get going, let's get that motivational, inspirational ball rolling with a success quote or mantra. Kasey, kick it off.
I'm going to go with what our topic we started this conversation with, which is if you love what you do, you never have to work a day in your life.
Ooh, dive more into that.
Really?
Yeah.
Well, I mean, you love what you do, and it shows. It shows through everything you do, and I think that's why you and your podcast are wildly popular. And I would say the same here at Spark. I have 10 full-time employees that work with me. And I often use that mantra. I say, for me, like if I had to describe my dream job, or if my kids say, Mom, we got to talk about our dream jobs, I'm in it. Like I love what I do. I love working with restaurateurs day in and day out. I love hospitality. I love everything about it. And my staff, thank God, the same way. Like, oh, we love what we do here. We love helping others like grow the business of their dreams. So I think that's why we're so joyful when we come to work. That's why you're so joyful in what you do. It's just, it doesn't feel like work. There's nothing else I'd rather be doing than what I do right now.
It reminds me of the quote, if you have the right why, you can deal with any how, right? And
Mm-hmm.
my why is, literally changing the world through finding people to make an example of, to lift up owners. And I believe that if we can lift up owners, we can lift up communities and the world will change. But what is your why?
Oh, God, this is tough today, Eric. My why. My why. It's kind of, how do I make it short? So I was a former restaurateur, right? I used to own restaurants in Boston. I thought that was my lifelong job. I loved everything about it. Literally is where I got goosebumps every day during a great service, even during the bad services. So in a new chapter in my life, having kids, wanting to be a super involved parent and all those things, I felt like I couldn't really be in the restaurant industry the way I wanted to be. But my why comes from like, I still believe and love in hospitality and what it does for the world, and that we just bring joy. And I write about this a lot throughout the book. The theme is kind of like, what's better than creating joy in the world? And I feel like that's what restaurants do, and that's what I help support them do. So that is my why.
I love it. Okay, so big picture, kick it off. You have this very fancy, beautiful looking slideshow. Get into your thing, Kasey.
All right, so we're gonna go over kind of the high level 30,000 foot view of Profit First, and we're gonna get a little bit into the trenches because when I was talking to Eric about this presentation, I'm like, it's a workshop. I want people to walk away with either one or two things they can go do, or at least just be able to wrap your arms around this thing and be like, okay, now I get what the heck she's talking about. Whether you've read the book or not, it won't matter. You are going to understand what Profit First Restaurants is and why it is extremely powerful. And I can't understand why not everybody does it. But okay, let's go. So we're going to go to overview. I'm going to talk about the financial health. It literally, this is the epitome of putting your money where your mouth is. That phrase, that's kind of what Profit First for Restaurant is. And then we'll tap into some, what your goals for your restaurant in the end. Horrible picture. I did not put that there. You can just ignore that. So the
I
Profit
like the
First.
shoes though.
No, I know those are great shoes, by the way. So I think those are great. Profit First Formula. This is from the original book from by Mike Michalowicz. He wrote the original Profit First, right? I wrote a derivative for restaurants. And I think there's 10, maybe 12 derivatives by now, but mine is obviously the best because it's for restaurants. So his formula is instead of following the sales minus expenses equals profit, which is accounting 101, that is the GAAP accounting that all of us accountants follow in the world. That's how we have to write our P&Ls. That's how we have to produce our taxes, etc. We're not changing the math. We're just changing the equation and saying, what if we did sales minus profit equals expenses? And when you do that, the whole game changes, right? Because if we're going to prioritize profit, which every single business should, because no business can survive, let alone thrive without profit, because it serves so many different uses in any business. But if we put it first and really prioritize it, then what happens is our expenses will conform to what the business or the sales can handle. So that's a big mindset shift that changes everything. And that's what Profit First is based on.
And Kasey, if you're going to get into this, I apologize, but I think there is a weird relationship with profit. I think a lot of people think of profit as what I get to take home. That's what I use to pay myself. But in Profit First, the relationship with profit is different. How should we be using profit?
Yeah, so that's what you just explained is one benefit or one use of profit is for the owner to use. That's one. It's usually not the first one. So if you have any type of debt in your business at all, whether you have a credit card balance, you have a loans, line of credits, whatever debt is listed on your balance sheet, the only way to service or to pay back that debt is through profit. There's no other way to pay it except for more debt. So you have to use profit for that, right? Because when you take out a loan or you use your credit card to go buy things, whatever it is that you bought using that credit card or using that loan, those loan funds, that's what you get to expense. Or maybe it's an asset. That's what you get to expense. You don't then get to expense the payments toward paying that credit card off or paying that loan or line of credit down. That comes out of profit. So that's number one. Profit is the only way that you can pay any debt. So if you're not profitable, if you're not running a profitable business and you have debt, you are in really big trouble because you are just going to be incurring more and more debt to satisfy that until you make profit. So that's number one. It's super important because you have to pay down debt. Another thing that it does is it helps grow a business, whether you want to expand or buy a piece of equipment or a new computer system or anything that's considered kind of an asset of the business. Again, that's not something that you can expense. And chances are when you designed your restaurant in the first place, you didn't design it going, all right, I'm going to sell, burritos or fries, and these are going to be my costs, and here's going to be my payroll. Oh, and then I'm going to buy this huge walk-in too, and I'm still going to be profitable. Like, no, it's not part of your daily operations. It's something extraordinary. It's an asset, and therefore profit is the only thing that you can use to buy assets or debt, right? Or I know I'm going to go take a loan out to go buy that asset. Okay, but then how do we pay back the loan? Through profit. So profit is connected in all those ways. And then the final big reason is what you had mentioned. It is a way to not only service the owner and reward the owner for creating a profitable, functioning, wonderful business, but also in terms of you can use it to, instead of giving away equity, which I never recommend as much as you can offer profit sharing for your general managers or your chef or however it is you want to grow. Because a lot of times in their minds, being able to say, oh, I share in the profit, I get profit sharing, feels like ownership. It feels like equity without actually giving away equity. So it's a great way to be able to reward your team, to create larger teams, and of course, reward the owner. And I can go on and on, but those are just some of the ways
Not
that.
only reward, but incentivize to give people
Yeah,
a
yeah.
reason to go the extra mile because that they know that there will be a benefit on the back end of that effort. But I think the big takeaways there is profit is used to pay off debt and to invest in assets, and it really profit first is a wealth generating system because you can then, as you invest in assets are things that make you money, even passive income. Maybe it's investing. It's
Yeah.
and I think where restaurant owners get so guilty is they don't take that profit to invest in wealth. They take it to cover their liabilities. And the thing I love about Profit First is that they account for owners' pay. So this isn't like you are paying yourself and then you're taking profit and you're keeping that separate. But maybe I'm getting way too far ahead of you, so I'll just let you take it from here.
Yeah, you probably are. But
Sorry.
that's that's a great point that you just made. And I'm glad you brought that up because profit and owner's pay should be and are two very, very different things. And I think the best way for me to kind of articulate that or give you the visual on that with any business, right, that you're setting up, there's you as the human being. So there's Eric, and then there's Restaurant Unstoppable. And it may feel like to you that they are one and the same because you created it and it's all you and you're the one who left holding the bag and all that stuff. But it's not. They're two very separate, and I'd like to say human beings, although Restaurant Ensemble, of course, is not a human being, but we treat it that way. And I'm going to tell you, in the eyes of the IRS, it's separate. So you have to remember to keep those two things separate. And for your business, for Restaurant Unstoppable, we need profitability is kind of like the cash flow engine that keeps it going, that allows it to grow, that pays its debt, that does all these great things. But then for Eric, Eric needs to get paid. Eric has a mortgage or a rent, and Eric has personal expenses like the rest of us human beings do, right? So then there's Eric over here. That's owner's pay. Profit is for the business. Owner's pay is for Eric. So we just always want to make sure we keep those two things very, very separate. Like, church and state, however they say it, it's very important that you keep those separate. And if you can get in the mindset of doing that, both you and your business will thrive because of it.
Love
The
it.
ones that don't and that really struggle for a variety of reasons is because of the commingling of the two when they're really two very separate things.
I love it.
What up, unstoppable restaurant owners and operators? We have to interrupt today's video to let you know that Restaurant Unstoppable and Restaurant Systems Pro, we're taking our relationship to the next level. Beginning in July of 2024, Fred Langley, CEO of Restaurant Systems Pro, is making himself available once a week in Restaurant Unstoppable Network to answer all of your restaurant systems questions, whether it's the profit margins. He will look at your P&L. Bring your P&L. He will take a look at that. He will dissect it. He will help you find your profit, whether that be through budgeting, inventory management, costing recipe cards, labor, checklists, you name it. He is a master on restaurant systems, and he's making himself available to you. Fred Langley and Restaurant Systems Pro started as a consulting firm, and for over 16 years, they've been helping their clients increase their profit by 10% or more. What are you waiting for? Click the link below to join our Facebook group, Restaurant Unstoppable Network.
Okay. So now we're going to dig in, I think, to a little bit. I can't see my next slide, but I'm just going to go with it blindly because this is a new presentation just for you, Eric. But now we're going to get into what Profit First for Restaurants is. It's a cash management system. It is literally a visual cash flow system because I'm sure you hear the term cash flow all the time, and there's in your QuickBooks or your accounting software, there's a statement of cash flows, which I'm sure you study every night or not. But this is literally cash flow. It's taking the cash that comes in and we're going to watch it flow through your business. Now, if you are like a lot of restaurants, you might just have one main bank account, maybe like this one on the screen. Maybe you have two, maybe you have one for payroll too, which is great. It's a great start. So when you have this, you might log in to your account on, let's say, a Monday after maybe the credit card, the weekend credit cards hit. And let's say for a small business or a food truck or whatnot, you have $12,846. And you're like, great, perfect, 12,000. I could make payroll and rent is due this week. Perfect. And then you're like, okay, now I got to pay my food and beverage vendors that are knocking down my door. Okay. All right. So I got some money left over. Let's pay them. And then there's usually a few other expenses that you need to also pay, right, from your business, things that need to happen. So you're like, okay, yep, I got to pay these guys, oven fix, whatever, bathrooms painted, I need meals tax, sales tax, whatever you guys call it in your state, get that due. And then by the time you're done paying everybody that's got their hands out, you may or may not have been on payroll, may or may not have paid yourself. You probably did not set aside any taxes that you would owe for, operating a profitable business because that's a taxable event. And then where did you put your profit? Because, and probably should have said this earlier, but profit is not a bottom line net income at the bottom of your P&L that you look at, hopefully at least monthly, if not more often, and go, oh, great. A+ if it's black and D- if it's negative or whatever it is. It actually should be money in a bank account. It should be money in a bank account that we nickname profit, and that's where your profit is. That's usually what throws people off. We really want profit to actually equal money in a bank. Yeah. So instead, all we're doing with this visual cash flow system by using bank accounts, which also is leveraging the human behavior of any business owner I've ever known, is by using their bank account. We're going to give every single dollar a job, an intention when it comes into your business. So instead, on that Monday morning, when you sit down, you log in, you're like, okay, I got some bills to pay. What am I going to do? Instead of seeing this, you're going to log in and you're going to see this or something like this. This is the Mac Daddy Profit First to Restaurants system. You can use a version of it. You can start slowly and work up to these accounts. You can explode and use more accounts. But this is how we're going to leverage how it works. So I'm going to explain real quick.
Real quick before you explain, if you're listening to the audio only version of this, what Kasey has when she says you will see this is a series of checking accounts: income, meals tax, cost of goods checking account, payroll checking account, profit account, owner's pay account, and owner's tax account, and then OpEx account. So if you head over to youtube.com/restaurant unstoppable, you can see the visual portion of this. Sorry, Kasey, I just wanted to make sure people that weren't
No,
watching understand.
yeah, I'm glad you pointed that out. And also these visuals are also in the book as well. If you happen to have the book or see the book or the workbook, these same visuals are in there. So the income account is all your sales get dropped in there. So your point of sale, your credit card terminal, your cash, if you bring it to the bank, and I hope you do, all those things get dropped into like a big, huge pile of money. So the way I like to describe this is like, just pretend like everybody pays you in cash. You're a cash only business and you just throw all this money in a big pile on the floor. That's your income account. Then you're going to take whatever your sales tax or meals tax percentage is. You're going to take that right off the top. Why? Because it's not your money in the first place. It was never your money. And we are the trustee and we have to set it aside. So in this example, in the parentheses next to my meals tax account, I have a 7 because in the state of Massachusetts, 7%. So we put 7% aside of that income account. So we have that taken care of for our meals tax. Then we have our cost of goods account and then our payroll account. Those are our prime cost accounts. And for this restaurant example, we know that they're running a 31% combined food and beverage or cost of goods account, and they run a 30% payroll. That's why I put them in parentheses. It kind of reminds them what they need to transfer to those accounts. Yours might be 40 and 20. Then maybe they're like 36 and 48. I hope not. They could be. You figure out when you do an assessment of your business what your percentages could be. And we'll get to that in just a few slides. So we transfer that money to those accounts and then it looks like this. So now our income account went down because we just allocated or transferred money out of it. And we put aside money for meals tax. We put aside our 31% for our cost of goods and we put aside 30% for our payroll. Now we funded those accounts. What's left in that income in our example, it's the 4659. Is what we call real revenue, also known as gross profit. That's the money left over that you run your business on after your prime cost, your sales tax is taken care of. So that's what these other parentheses stand for. These equal 100% of what's left of the real revenue. In our example today, this was Lucy's Bistro. It's the one that I kind of bring you through in the entire book. Lucy was just starting to be profitable or wanted to be profitable. So we're only going to start her at 1% set aside because this system is not designed to like wallop you over the head and make you want to jump off a cliff. We're going to beach entry into this. As you make improvements in your business, we're going to increase the profit amount. But when we're just starting out of the gate, we're going to say, just do 1% of the real revenue, just 1%. Because if you can operate your business on 99% of your business, you can set aside 1%. It's slow roll. And in this case, it's $46. I know she can do it. So that goes to the profit. We had 40% for owner's pay because that's what she was already making. We were leaving that alone. 1% for taxes, which is low, but again, beach entry until we try and find money saved somewhere that we can add. And then the last 58% of that real revenue went to her OpEx account. So now this is what I mean by not only visual cash flow, we watch the money start at the top and flow through based on her business model into these accounts. But now we have this kind of live working budget. Now we know that she's got $3,700 to pay her food and beverage vendors. She's got $3,500 for the payroll for that week. So what if her payroll, she runs the payroll in her software and it comes out that she owes $4,000 for payroll? Right? You can't underfund the payroll, but here's one of the beautiful things about this process is that now in this example, Lucy has to make a decision. I got to put another $400 in that payroll account so my payroll doesn't bounce. Where am I going to take it from? Am I going to take it out of my food and beverage vendor account, like, and piss somebody off? Maybe. Am I going to take it out of my owner's pay, which a lot of people do right now? Possibly. Am I going to take it out of my OpEx account and maybe not pay some type of dues, subscription, insurance. Hopefully not. Most likely it's going to probably come out of your owner's pay. And it's in making that decision and being able to see it visually, it really does kind of change the game on how you're going to work on your restaurant to fix the percentages. Because clearly, if she has to pay $4,000 in payroll, she's not running at 30%, is she? She's running higher. Maybe she's at 32, 33. And I'd rather her know that now and work to change that immediately versus waiting to the end of the month when the books are closed and the percentages come out and you meet with your bookkeeper and then they'll say, oh, by the way, you ran 32% last month. Oh, thanks. Like I just lost a few weeks. So now we're doing it immediately. It's one of the great benefits. Getting into the brass tacks and how to set up these accounts. Most banks, not most, a lot of banks already have heard of Profit First. Most are not surprised. I have a printable worksheet that you can have, which you can bring to the bank with you, but it basically tells you what accounts you need to set up, their checking or savings, and why. These should all be free, no fee, no minimum checking or savings accounts. Yes, they do exist. We have a list of banks that offer this, and you should never be paying for your bank accounts, as far as I know. All right, now we're going to move quickly into the assessment. Like, how do you know what percentages are for you? Hopefully you might, on this call, you're probably all veterans. You probably have an idea of what you are really running in your food and beverage, your payroll, etc. But just to do a quick assessment, this is what you're going to do. On the screen here, this is also the same one that's in the book. I have a collapsed version of a profit and loss report, also called an income statement, right? So what we're going to take is the total revenue. This is for 1 year. And in this example, it's $500,000, 500,000. Total cost of goods. We're looking for total payroll or labor, and then her total operational expenses down here. So that would be like admin, advertising, occupancy, direct operating, those things. We're collapsing them down. We're going to come up with amounts for those buckets. And then we have owner's pay and personal expenses. And if there was any taxes paid, that would be on here. So this is just one sheet. We kind of put all the data together and saying, okay, now we're going to fill out this chart. So this instant assessment chart, again, free to you. There's tools you can download for it, and we're just going to fill it in so we know where everything's going. So they have 500,000, 160 in COGS, 155 payroll. That means 185 in real revenue, and here we are. Owner's pay 74, 120 OpEx. She was running at a loss of 9,250 for this 1 year that we did the assessment. So what does that look like? We're going to just do some simple math. We're going to divide each one of these by 500 to get her cost of goods and her payroll. That's where we come up with these CAPS percentage, stands for current allocation percentages, just meaning like this is where the money's been going before you did this assessment. And then down here, we take these amounts, divide them by the real revenue to get what her profit, owner's pay, owner's taxes, and OpEx percentages are. So this is our starting point. We don't want to live here. We want to get better than this, obviously, because we want to be profitable. So then we take this, and we're going to put it into another chart. Right before I get to that, I have our Mac Daddy TAPS chart on the screen. So if you're wondering, hey, what should I be running at? This is a chart that was developed by Mike Michalowicz, the original author of Profit First, where when he wrote that book, again, 10, 11 years ago now, he interviewed thousands of businesses in different revenue ranges, many of them restaurants, but also across other industries, and kind of came up with what was the average of the healthy business running based off of their real revenue. So that's where these percentages come from. It's a good starting point. You may or may not end up there. You know, we want to follow your business model and how you plan to be profitable. That's where we want to get to. But for this example, and Lucy's, she would be under column A because her real revenue falls under 250,000, her real revenue. So we're looking for her to be at 5% profit, 50% owner's pay, 50% taxes, 30% OpEx, maybe if she can get there. So what that looks like, oh, I just went too fast. So we put that in this final chart. This is our TAPS chart to kind of figure out what we need to do. Now at the top, she was running 32% in food and beverage costs. We want her to run at 30, which means we're looking for a $10,000 decrease across a year. So less than $1,000 a month. Pretty easy to do with maybe some menu pricing, maybe figuring out some menu mixes and food costs, beverage costs, etc. That's not too hard to do over a year period. Same with payroll. She was running at 31. We want at 30. We're just looking for a $5,000 decrease across the year. Some light scheduling differences. We could probably come up with that. So easy lifting. Down here is where the real work is going to be done. In order for us to be able to increase her owner's pay, increase taxes, her tax savings, and then add to profit, we need to drastically reduce her OPEX. This is where the work is really going to happen. Will she achieve a 30% OPEX when she's running 65? I mean, probably not. But the work that she's going to do to get her there, that's gonna transform the business. It's the fine tuning, sort of the nickel and diming, but in a really good way, because it's going to ensure that she's creating efficiencies, whether it's inventory, whether it's doing away with things she's not using. It's really just fine tuning the business model. So even if she hits 40% or 45, that still frees up about 20% for her to use toward her owner's pay, taxes, and profit. And that's certainly better than where she is now. So the final piece of this is what we do with our clients. You may or may not necessarily need to do this if you're doing this on your own. But when we work with restaurants who want to implement profit first, we have their starting point, which is kind of like day one. And then usually it takes about 6 quarters, sometimes 4 quarters, so a year and a half for us to get from point A to their point B, which is like the best that they can run. Some do it in much less, like I said, but usually we like to give it 6 quarters because there's really can be a lot of work to be done there. All right, so you want to talk about case studies, Eric? Want to talk about some success stories, some failure stories?
So are these case studies in the past 2 years?
Some are even beyond that. Probably all in the past 5 years. In the past 2 years, yeah, I'm gonna have some for the past 2 years too. What do you want to talk? Which ones do you want to talk about?
Take it away. Whatever you want to talk about.
I think I'd like to give one of each.
Okay.
A success story and then a not so success story.
Go for it.
Okay. All right. Which one should I start with? I'm going to start with the non-success story just so I can end on a happy note. But this non-success story is one that's in the restaurant. Is the one that's in the restaurant book. I mean, it's in the book. So this is the Burger Shack that I talk about through the book. And to us, they were in Indiana. They were in a college town. They came to us about 5 years ago. Really gung-ho, loved his business, loved everything about Profit First, set up all the accounts from the original Profit First before my book came out, and couldn't figure out why it wasn't working. So engaged with us. Hey, I want this to work. So he comes to us and I'm like, all right, well, send us your books, send us your QuickBooks backup so we can take a look. And his books were a mess. So number one, like if you don't have financials that are perfect, I mean, they should. Let's face it, it's software. It should be perfect. You can't, it's kind of like, driving at night without a roadmap across country. Like you don't know what you're doing. So we had to say, hold up. Center is fine, but let us figure out the numbers first. So we got into his books and we realized that his food cost was astronomical. It was like 60-something% just for the food cost. He said, no, that can't be right. That can't be right. And I'm like, okay, well then show me where we're wrong. We sent him the detail. And we weren't. I mean, we were right. So what ended up happening with this Burger Shack, he was running so high. Every time he sold a burger, he was losing money. So when he was trying to run Profit First, it wasn't working for him at all because nothing was making sense to him. He was losing money every time he sold something. But the benefit of running Profit First was it bubbled that up to the surface right away. Not only just doing his bookkeeping, but him by trying to allocate money, but then there never, ever being enough. And him like, I don't know why. I guess I just need to sell more. I guess I need to sell more.
What gets measured gets minded, right?
What's that?
What gets measured gets minded.
Yeah, all the things, all those phrases. Absolutely. He just didn't know, but it was such a dangerous situation to be in. That I'm glad we got it out. It's a sad story, one, because he needed to literally stop operations and stop the business because like I had said, every time he sold something, he was actually losing more money and just didn't realize it. And he dug a hole so deep. I want to say when he came on board with us, he was about $500,000 in debt. Oh. And given his business model and what the revenue streams were and things like that, in order for us to get him out of debt would have been way beyond his lease. It would have been like 20 years plus. And that's if everything went perfectly. It just wasn't doable. It wasn't doable. He wasn't going to raise the price of his burgers from $8 to $28 to cover it. Like who's going to pay that? So, but in the end, I think we saved him from digging any more of a hole. He definitely thanked us at the end. He really thanked us for like getting him out of that and showing him the light. So that's the way, that's how Profit First really helped a business model that was broken. And it does do that. It does it across the board. We have clients, and I'd say, now I have 260 clients, but about 95 are strictly restaurants. The ones that come to us and we run them through run them through a Profit First assessment real quick, we know immediately like, oh, this isn't working. Something's broken. It's either your food costs or your labor. Maybe it's your occupancy. We need to dive, but we know immediately. So before we implement this system with strict guidelines, let's figure out what your business model is or was supposed to be, and how do we get back to that? So Profit First is really helpful with really redefining or getting back to what your original business model was supposed to be. Because let's face it, I hope it was supposed to be a profitable business model.
So do you remember diving into this guy's business and really looking at like, why are you 30% over what your food cost should be? Like what is going on here? Did you identify what those issues were?
Well, yeah. So when we finished, the books for the first year, and it came up to over 60%, and he's like, no, when we sent him the profit and loss detail, which just listed all the vendors, so it was where he's getting all of his buns and all of his meat, and then there's, the ketchup, the pickle, the doily, like everything that was included, and we showed him, he was, with a pencil going through, like, yep, yep, yep. And so I was like, okay, let's break down one plate, like what you're selling. So we grabbed that, had to, weigh the burger, the ounces, and that's
Yep.
what, hopefully everyone's doing. Really weigh, like, what exactly is the
Recipe
cost of this
costing.
thing?
Yep.
Complete menu costing, recipe costing. So when we got down to it, he was running, it was 58% on one thing, I think it was, all day long. But he thought he
And
was running at 30.
did he sell did he sell French fries?
Yeah.
Was it an issue? So we just recently did something in the Profit Power Hour where Fred Langley from Restaurant Systems Pro is helping us out, and he advised this person who joined us to do a descending expense report, to ask his vendor for a descending expense report where it lists out the things that you're spending most of your money on to supply your business, the goods. And for a burger joint, it was likely probably French fries and then beef patties and then buns. But where people go wrong is they over portion French fries. And if you're accounting for like a 5-ounce portion, typically, if you're not measuring, you could be doing an 8-ounce or a 7-ounce. So you're
Oh,
almost
yeah.
doubling. So like, and then if you're not tracking waste and like all these things, like, or, people are just eating food like willy nilly and you're not tracking, is that the kind of stuff that you were seeing once you started diving in?
Oh yeah, we find that all the time across the board. And even with more fine dining or sit down restaurants, oftentimes if they're going to give out complimentary, bread service, like they're not counting that anywhere in their food cost. So it's baffling to me when I think like, well, where did you think that it's not free? Like, where did you think it was coming from? But it didn't occur to them that they should tack on, 25, 35, 40, 50 cents to their costing every time they put a new menu item out or a current menu item out to counteract for the rolls, the bread that we give out. So we dive into every single detail of the plate, or really what's on the table, and then make them go out. And that's why there's an entire chapter in the book on menu costing and a very simple way to do it, but just to make sure that they're capturing everything on there. Because a lot of times, like, all right, burger, bun, I'm done, good, that's the price. And it's like, well, no, because everything else costs money. The salt and
Right.
pepper costs money. Like, and I'm
Right.
not saying weigh out the grains of salt and pepper. I'm just saying assign a value to it. 3 cents, 5 cents, 10 cents, whatever it is. Give it a value, because nothing was free, right? And when you do that, it completely changes what they thought their food cost was.
What up, unstoppable restaurant owners and operators? We have to interrupt today's video to let you know that Restaurant Unstoppable and Restaurant Systems Pro, we're taking our relationship to the next level. Beginning in July of 2024, Fred Langley, CEO of Restaurant Systems Pro, is making himself available once a week in Restaurant Unstoppable Network to answer all of your restaurant systems questions, whether it's be profit margins. He will look at your P&L. Bring your P&L. He will take a look at that. He will dissect it. He will help you find your profit, whether that be through budgeting, inventory management, costing recipe cards, labor, checklist, you name it. He is a master of restaurant systems, and he's making himself available to you. Fred Langley and Restaurant Systems Pro started as a consulting firm, and for over 16 years, they've been helping their clients increase their profit by 10% or more. What are you waiting for? Click the link below to join our Facebook group, Restaurant Unstoppable Network.
Yeah. So what is the big takeaway from this case study?
So I guess, I mean, there's a lot of takeaways, but I think for me, I use this case study a lot as a takeaway that profit first is a great way to bubble up to the surface any fire drill issues that you are having right now in your restaurant or in any business, but we're just talking about restaurants right now. Because if you think that when someone spends $100 for easy numbers in your business, they come in, they spend $100, and you're saying, great, my food cost is 30, my payroll is 30, and then all my other OpEx is 30, that gives me 10% profit, meaning that that $100 that somebody spent, you're putting $10 aside for profit or in your pocket or whatever you do with profit, but your books aren't showing that. Like, this is going to
Yeah.
bubble up to the surface, like where you're bulging. Were you,
Yeah.
maybe you weren't 30%, maybe you were 58%, maybe your
Right.
labor is 30, maybe it's 92%. I mean, I've seen
Yeah.
that.
The big takeaway for
So
me it was just that like when you start allocating and you see industry averages, like for example, prime costs, you want to be at about 60%. You can dice that up between labor and cost of goods. But when you start seeing industry averages and how you stack up, it makes you realize, okay, well, where is it? It forces you to start the investigation, right? And like if you unless you're tracking it, you'll never know. So that's the big takeaway for me. So do you have any how many more case studies are you going to share with us?
just one more, just
Okay.
so it's a good one. Yeah. So I was trying to think of which one to use. And oddly enough, they're all in California that I'm thinking of right now, but I feel like California restaurants get kind of hit the hardest
Yeah,
lately.
they're the
So
ones
it's,
that have to track it the most because of the it's so like oh my god,
yeah, I'll
labor
never
tax.
start California. That's crazy. But these places have done really well. So I think I'll go on the op instead of doing the casual one I was thinking about. We have a bistro, more of a fine dining one, outside of San Francisco. And when she came to us with Profit First, so she's been a client for about a year, maybe just over a year now. This business was doing okay, meaning it was already able to pay its bills, right? It could pay its bills. It didn't have any vendors screaming, knocking on their door. They were able to pay themselves what they thought they, though they weren't really sure like what they should be making. They just kind of paid themselves what they thought they should. So overall, they were doing okay. There was no such thing as setting money aside for profit, an account called profit and looking at it. There was really no things that they were doing other than like they had a great loyal following, they made money and they could pay their bills for the most part. And at the end of the day, okay, like she just wasn't sure where to go next. Like I think
Revenue
we're
will
doing,
solve a lot of problems.
what's that?
The revenue will solve a lot of problems, but you can still get better even if like you have the cash flow. You can still allocate and get better.
Revenue can solve a lot of problems. It could also cause problems, as the case with the Burger Shack, right?
Right.
The more revenue was putting him in the hole deeper. But in this case, all we had to do, like she wasn't having a revenue problem, which is like kind of unusual, but it was like a nice, refreshing change for us to kind of work with someone like, okay, so you're not, there's no fire drill here. You're doing okay. You're just not quite sure where you're supposed to go. Great. We can throw a Profit First at you right now. Let's do the allocation. The allocation was like she was running a little high on food costs, like a decent amount high on labor. We were able to show her using dollar amounts like, hey, this is what's going on. Like, this is where your labor is high. Now let's dive into your scheduling. Let's dive who's on staff, dive into what you're paying them. Let's figure this out here. So she just by Profit First bubbling to the surface, like, okay, like, yeah, labor, like that's my low hanging fruit that I really need to figure out. She talked with the chef, they figured out a new kitchen model, whatever. She was able to chop off, over the first 6 months, like 3 to 4% of that. The same time, whittling down the menu pricing. A lot of it had to do with the complimentary focaccia they offer, things like that. So we were able to do some menu pricing changes. We added some specials that had a much higher profit margin to kind of offset the ones that were lower. So doing that, so I'd say she's like my poster child because in the first 6 months, not only was she able to like make those changes that she may or may not have made without us, doing Profit First and working together. But she had all this money set aside for profit that we were able to move that needle and keep putting more of the percentage of profit over there, paying her owner's salary that she was like, oh, I don't know if I should take that. Maybe I should leave it in the business. Nope, you need to get paid. You are the number one employee in this business. Let's pay you what you should be paid. Let's set aside the taxes so you're not screaming around when 415 comes around, right? We did all those things. And now, like, we're a year into it, she is loaded in terms of profit is set aside. She takes half, she leaves half as a reserve fund in her business. She's making the most amount of money she can. She's loving her business right now. She's writing a book about something to do with wine rooms or something. I forget. It's kind of a unique book. She set aside another account because she wants to do more when it comes to like marketing, advertising, probably has to do with her book for her restaurant. So we set aside a little satellite 5% marketing advertising budget that we take off the OpEx she can afford. So now she's got a live working budget to go do those fun things for her business. So she really took, Mac Daddy Puff Cash to the proper, and then really just expanded it because it was working so well for her. And, like I said, because she's doing the allocations like every single week, she knows immediately if her costs are in line. And if your costs are in line, then everything else can just really type to flourish and the balances start to creep up. And it sort of gamifies the whole thing. Because if she can drop her food costs by 1% more, that's more money dropping down to fund all the other accounts. And it's just fun. And she loves it. So again, she's probably who I'm going to recommend you talk to on your next podcast if you go to
Okay.
California, because she's one of our poster child. She's killing it. And it's such a great thing to watch.
So what comes to mind as I'm hearing this is I one of the biggest lessons I've learned here in terms of growth and scale is cash flow and people determine growth and scale. So when you start allocating and you know exactly where the money is going and what you have, it really acts as a governor to let you know, okay, what can I do? Like we are consistently bringing in more money. We have money going to these places. You don't, it takes literally all the guesswork out of it. So now like this is the capital I have to do the next thing. We are consistently showing these trends that this money is coming in. Where can we take this overflow and where can we put it to add value, to add assets, to hire somebody, to put more money into driving revenue, whether that be marketing, so like it just takes all that like guesswork of like, am I ready for this? Is the money there? Do you have the people to execute on the strategy? Yeah, go for it. What are you thinking when I say that?
Yeah, I'm thinking all of that. I love the term you use, governing. It really is, although that almost sounds like political in a way. But I love that the term that you're using. I love it's exactly what it does. I had another thought that just came into my head when it came to this, and I forgot, and it just like went out of my head. Oh, yes, I know. So we are talking about that, and I was thinking about, I think it was Mason who had brought up, he set up the system but didn't start using it because he had this other thing kind of going on with buying out a partner, I believe he was talking about, whatever. I have in talking about in like governing the money. In the book, I talk about expansion, and I gave an example of just say you wanted to expand your outdoor seating. So what I would recommend anytime that you have something extraordinary happen financially in your business, whether you're buying out a partner or you're growing, you're increasing your capacity, usually you need to go borrow funds, or even if it's your own personal funds, right? And I would set up a separate account that just governs that. So in the example I use, just say they went to the bank, they borrowed $100,000 to create this outdoor seating, new door, glass door, etc. And that's kind of like, it's $100,000. That's what you have to spend. That's what you borrowed and you have to spend in order to build this thing out. It's not going to touch the profit first for restaurant accounts because you still want to be running your business like a lean, mean machine, right? You still want that money to come into your income that you're allocating. You don't want the expense of, the electricians and, the new door coming in, all that hitting over here, hitting your restaurant accounts, because it's not your restaurant's fault that you want to do. Like, they shouldn't be hit. It should be separate. And so I was just thinking about Mason. I'm like, he put in his own money. I'm wondering if he had done that separately, invested his own money, and that way we can add it to the balance sheet, as a shareholder loan, and being able to service what that $5,000 he had to pay off out of there without affecting the profit first accounts, because it's just really segregating the money to where it belongs.
Yeah.
That makes sense.
Yeah. One more
Yeah.
question before we start to wrap it up. And
Yeah.
do our Q&A. Mason, we'll have time for you to, we'll come to you first. In terms of, you mentioned like you need to be using software, right? Like in today's age, you need to be using software. How do you see Profit First work with the enterprise solutions that are out there, i.e., the Restaurant Systems Pro and like the Restaurant 365s? How does this and that play?
I I don't think there's anything to even think or like talk about there. It's just unless those systems, and we're familiar with both. We do not work in either of them for various reasons, but they don't have a cap on the number of accounts that you can have. So there should be there's no difference, right? They
Right.
they don't say, hey, you're only allowed to use one bank account. So and literally the only bank accounts that have a lot of activity, which is going to be your COGS account, your food vendor account, your payroll account, and your OpEx. That's going to have the activity, and it's just going to be dedicated to those three items. Everything else is just going to be just a quick transfer out for a quarter and then back in. So I don't think as long as there's no limit on the accounts that you attach there, there should be no change. And this kind of goes with this slide I have up is the biggest pushback, and I had it yesterday on a call with somebody about like I just don't like a lot of bank accounts. I don't like, and I get it. I'm not here trying to sell you on bank accounts. I just know that this is the only way I've seen it really sink in and work with entrepreneurs because they aren't the most logical people that can just work with a spreadsheet. Not even me, and I do this for a living. Like I need the bank accounts. So I feel like that's the only difference here. Instead of having one bank account and everything comes out of, and we're hoping and praying we did the right thing. We're just going to like give your dollar a job and segregate it into bank accounts with different nicknames.
Yeah.
But it all works the same. The accounting's the same, and it actually simplifies the bookkeeping and accounting, if you ask me. Makes it very
100%.
simple
And
and
I
clean.
sorry to interrupt.
Yeah.
I see profit first as like the first step. If you are realizing that as you grow and scale and you realize you need to eventually implement and improve your technological stack to just be more efficient, right? And to invest these assets in scale, like, that profit goes to investing in assets. It could be to get the initial investment into your tech stack, right? If that's like something that's holding you back. But all that technology is a system, and profit first is a system. So if you feel like you are not, whether it be cash restraints or you just don't know if you're there or you're ready yet, this is the first step to getting in that direction of going to an enterprise solution that has a general ledger tied to it, because those platforms essentially are using the profit first philosophy. You are having accounts allocated in those systems, and you can have that same effect with using checking accounts and the bank technology, right? It's the same idea, and this is one step closer to the enterprise solution. So if you are somebody who's like, I can't afford that, or I don't have the bandwidth for that, but I know I need a system, like this is the first step in my mind, leveraging profit first to get to that point where you can invest in more robust systems. Do you agree or disagree with that, Kasey?
Oh, I would definitely agree with that, 100%. Because that would play into anything that you might want to grow into, whether you want to have 10 units of it, you're only on your first one. I would absolutely all day long implement profit first or a version that works for you. So like this is the Mac, like literally I call it the Mac Daddy version, but even if it's just you set up a separate payroll account, a sales tax account, and maybe a profit account, if you start small, any version that's going to give intention to the money coming in that you set is going to have massively positive benefits for your business.
Good. Okay, so before we wrap it up and say
Yep.
goodbye, I do want to have you call somebody out. So this is my North Star. This is how I find people to make an example of. I don't want to decide who I should talk to. You know the industry better than I do. So who do you respect and admire? Who's doing it right? I think you already kind of alluded to who you want to call up. Make it.
Yeah. So her name is Laura Magoo, Magu. She owns Reeve or Rev. I should probably know how to pronounce it. I was too embarrassed to ask her. It's Reve. Um, in California, it's not Walnut Creek. It's the town right next door. I can get you that, but it's Reve, Rev Bistro. Laura Magoo is the owner. Like I said, she's been a client for just over a year. She is like I say, it's the poster child. She's taken this profit first restaurants and has gone crazy with it. She recommends it to everyone. She's killing it. And she's also some other things that I talk about with my clients on my own private client group in terms of other revenue streams and really just like maximizing profitability and revenue. And she's been taking a few things I've mentioned and running with it and just and tracking everything and killing it. So she's a great person to talk to, and she's just lovely. You'll love her.
Laura Magoo, look out. I'm coming after you. I'd love to get you on the show. And We got to let our listeners know if they're not sticking around for the Q&A. I want to get this out now. What is the call to action? If we are interested, if we want to take the next step, obviously there's the Profit First for Restaurants book that you authored. We'll link to that in the notes. If you're listening to this on Spotify or iTunes, just in the notes, we'll link to that. But you have something else that you're excited to share. What's that?
Yeah, so I would definitely say the book, whether it's you download the audio or get the book Amazon or wherever books are sold, is great. There's a lot of fun stories. It's fun. It's a fun read, I'd like to say myself. So that's step one. Step two is I just redeveloped the Profit First Restaurants online course because one, as much as we do get a lot of leads to the book, which is lovely, we can't take everyone right now. We're not even onboarding anyone new at the moment. And it's not that if you can follow it through. So we created this online course which teaches you, or if you happen to have a bookkeeper accountant that you love and they're game to learn this, like they can go through the course and it's just very step by step on exactly how to implement it in your restaurant. So that's what we developed. So that's live and ready to go. And there's lots of downloads and like cool stuff that goes with that. So that's number one. I highly recommend that.
So
I also,
go ahead.
yeah.
Sorry.
I was just going to mention, so we also, in case that you're working with like an accountant or a bookkeeper that works with a lot of restaurants or you know one, we have a restaurant certification course that's for them, where we're certifying more people to do what we do for restaurants because again, we can't fulfill the capacity, but there is a lot to know about restaurant accounting and chart of accounts and things like that. So we have a restaurant accountant certification course as well. And then there's lots of other fun little downloads and the free tools that I had mentioned about Profit First, the number 4restaurants.com. I think right now we have maybe 16 free tools that you can download to help you implement this in your business.
Yeah. And if that's a lot to remember, if you head over to restaurantunstoppable.com/profit first, we will link to the book. We will link to the course. We will link to Profit First for Restaurants tools. I think we also have the original interview that we did with Kasey and Mike McAllowitz there if you want to check that episode out. And I'm excited to announce that going forward, Kasey and I are going to be collaborating in Restaurant Unstoppable Network. If you want a piece of Kasey, because she's so busy right now with clients, you might not be able to work with her. We're going to at least give you access once a quarter for an hour. We're starting a Profit First Power Hour, essentially Restaurant Unstoppable listeners getting together to support each other with the Profit First for Restaurants expert Kasey Anton there to coach us along the way. So you can sign up for Restaurant Unstoppable Network and get access to Kasey once a quarter. So stoked about that, and thank you for doing that, Kasey. And I think that ties up all of the calls to action, right?
That's it.